I want to quickly talk to you about LendingPoint versus Achieve versus Happy Money. Of course, we are speaking about personal loans, and you can get it up to $50,000. So let me give you the loans here. I want to first talk about LendingPoint. So when you think about LendingPoint, what should you be thinking about? I want you to really think about the fact that you can borrow anywhere from $1,000 all the way to $36,500. Okay, so that's the interval I want you to really think about, 1,000 to $36,500. And the cool thing about the LendingPoint is that you have a lender that offers loan options for borrowers with fair or bad credit. This service provides funding as soon as the next business day after approval, so you can get your cash real fast once approved, and you are able to pre-qualify online with a soft credit check. So this is kind of cool because you are actually making sure you don't have a hard pull through this service. Okay, so those are the top the top advantages that you can go through when you actually choose LendingPoint. On the flip side, they do not allow co-signers or co-applicants, and they sometimes limit the maximum loan amount to $36,000 or even $30,000, by the way, and they may charge you an origination fee up to 7%. So I mean, some other lenders charge you all the way to 10%, but LendingPoint is charging you 7%. But it's still something anyway. Okay, it's still a lot of cash when you think about it. Because if you are approved, let's say for 10 grand, they take out $700. That's really something. Now, LendingPoint is best for if you have a fair credit, if you need fast funding, or you want a loan with few restrictions. This is really good. LendingPoint is now really right for you if you are able to qualify for a better rate from another lender, because they charge you anywhere from 7% all the way to 36%. And if you are looking to build credit, don't go with LendingPoint. And if you need to borrow more than $36,000, don't go with LendingPoint. Or also, if you live in Nevada or West Virginia, you're not going to be able to get a loan through LendingPoint, because right now they do not operate in those states. They are actually thinking about getting their license there, but they don't have it yet. So in terms of perks and features, with LendingPoint, you have relatively low minimum credit score requirements. You have online pre-qualification, and you also have the option to change your payment due date later on. So the cool thing is LendingPoint allows you to adjust your payment due date after you have made your first payment. So that's really good from a flexibility point of view. So if you are thinking about the LendingPoint this year, how do you qualify for a LendingPoint personal loan? Well, the thing is that you first want to see if you pre-qualify, right? Don't go through the whole process right away, because otherwise they will actually do a hard pull on your credit. So you always want to start first with a soft pull to see how much you could potentially qualify for. Okay, so basically in terms of qualification, you're looking at a minimum credit score of 550 all the way to 650. So that's really good. And in terms of income requirements, LendingPoint wants you to have at least somewhere from $2,000 to $3,000 minimum gross. So that's about 24,000 minimum gross. And you also have the possibility to actually check your rates. I just want to insist on that, so you can check your rate. But don't forget that you cannot actually have co-signers or co-applicants. If you decide to go through LendingPoint, you're not going to actually find this lender pretty interesting for you if you want to really involve co-signers or co-applicants into the process. So LendingPoint does not allow co-signers or co-applicants on its personal loans. So applying jointly can sometimes increase your odds of approval, that's for sure, or even help you get a lower rate. But LendingPoint doesn't offer that. So if you would prefer to apply with a co-signer, it's just better to go with other lenders like SoFi, like Achieve or Happy Money, or other players, or even Avon, by the way, Avon. So that's really possible. And so once you check your rates, once you go through the soft pull process, check your rates, you review your offers, submit a full application. So once you submit a full application, they'll do a hard pull to see where you are at in terms of FICO score. And then based on that, they will give you a loan. I mean, they will approve your loan, and also the conditions will come after they check your FICO score. Okay. And so once you have everything done, wait for approval and receive your loan funds which can happen within 24 to 48 hours. Next, I want to talk to you now about Achieve. When you think about Achieve, what should you be thinking about? First of all, where LendingPoint was giving you a 1,000 all the way to 36.5 thousand, basically Achieve gives you way more. Achieve gives you anywhere from 5,000 all the way to $50,000. So you can see right off the bat that their minimum is actually higher than what LendingPoint is offering, right? So Achieve is giving you a 5,000 minimum, and the maximum is kind of higher too, so $50,000. And so, but you got to have at least a fair credit. I mean, they will approve you if you have bad credit also. The minimum credit score depends on your geography, on your state, and but they will look at your application if you have a FICO score starting at 575. So 575 all the way to 620. That's really the possibility that Achieve really has. Okay, and you have actually the loan term, the repayment window is 60 months. So that's 5 years from the date of approval. But Achieve does charge you an origination fee, but that's only 2%. I mean, I said only 2% because when you compare this to LendingPoint 7%, that's really nothing. Okay, so 2% origination fee, you get your funds actually the next day. So that's really fantastic. You have a lot of possibility there. What I want to say also is that when you think about Achieve, you have flexible loan terms with 2, 3, 4, and 5-year options. You have loan amounts as high as 50,000. You also have a lender that offers co-borrower, retirement assets, and direct pay discounts. So this is really good because LendingPoint doesn't want you to have a co-borrower, but Achieve has no problem having that on your application. So that's really good. So Achieve, when you think about Achieve, think about a lender that has been around for more than 20 years. As a matter of fact, back in the days, it used to be called Freedom Plus. Okay, and they actually rebranded in 2022, and so basically right now it's called Achieve. So Achieve is actually great for you if you need a debt consolidation loan, if you qualify for one of their available discounts, and also if you want to apply for a loan, for a personal loan with a co-borrower. So that's really cool. So how do you qualify for an Achieve personal loan this year? Well, what you want to do is you got to have a minimum FICO score of 575. So everything starts from there. If you have anything below that, it will be very hard for you to qualify for an Achieve personal loan. But remember that the loan amount I'm talking about goes from 5,000 all the way to $50,000. The reason why I'm telling you this week is because you have to really plan the repayment phase of your loan. Once you get the loan, how are you going to repay it? Would you have enough revenue, enough inflow, enough cash inflow to repay the loan? And you may need to provide your social security number, proof of income, employment status, and a government issued ID to actually kick off the process. Okay. Now, just remember that Achieve personal loans are originated by Cross River Bank and are not available in all states. So basically, the minimum loan amounts available through Achieve vary by state. Actually, sorry about that. The minimum loan amount vary by states. Okay, so basically, even though the interval goes from $5,000 to $50,000, basically maybe your state might be in your state the maximum loan amount could be maybe 5,000 or 50,000. By the way, okay. So in terms of applying through Achieve, you want to start the pre-qual process. You want to provide personal information. So that's really important for you to really know where you are at. So when I speak about personal information, you have to input your name, date of birth, phone number, and email address. Then you will be prompted to add your address. And also you have to continue the application. So if you are pre-approved, you can continue your application through email or work with an Achieve loan consultant. So that's totally possible, by the way. And once you have that, you have to select your loan term. So you can choose a loan term of 2, 3, 4, or 5 years. And also you can get approved. So basically Achieve will review your application and may get back to you with a decision as early as the same day, and funds will arrive within 24 to 72 hours. So in terms of flexibility, you can't really get better. Okay. But overall, Achieve has actually an A+ rating from the Better Business Bureau. They have about 4.8 out of 5 stars on Trustpilot, which is really considered excellent. So the cool thing is that you have a lender that's really, really responsible and really fast too. Next, I want to talk to you about Happy Money. So when you think about Happy Money, I mean, you know what? I love the name of the lender anyway. Happy Money is pretty good. I mean, and with the Happy Money, you are looking at a relatively less generous lender than Achieve, because Happy Money is giving you somewhere from $5,000 to $40,000, and you have an APR that starts at about 12.45%. Okay, it goes from 12.45% all the way to 18.45%. So something you really have to think about. And the minimum credit score that the Happy Money wants you to have is around 600. Okay, so you can really think about not Achieve, sorry, Happy Money. You can think about Happy Money as a great option for consolidating credit card debt, as long as you can qualify for its lowest rate. Okay, and so basically, when you think about Achieve, why am I saying it? Why am I keeping saying Achieve? I'm talking about Happy Money now. So with the cool thing about Happy Money here is that with the Happy Money, you are able to you get free access to your FICO score every month. That's really good. But just remember that you have a limited loan use, because while many lenders are flexible with personal loan use, Happy Money limits you as a consumer to just consolidating credit card debt. And also, Happy Money charges like an origination fee ranging from 1.5% to 5.5%. So this is actually a one-time administrative fee that will be taken out of your loan funds at dispersal. So just be aware of that. But overall, when you think about Happy Money, think about the fact that you have a lender. They have a direct payment. They actually sends a direct payments to our creditors. You have free access to your credit score. You have a low maximum APR, and this lender reports to all three credit bureaus. So that's kind of cool. But on the flip side, you have limited loan use. You have a lender that charges you an origination fee. There is no option for co-borrowers or co-signers, and the lender doesn't offer any interest rate discount. So this is really disappointing. Okay, and just remember that in terms of debt to income ratio, it has to be less than 50% for Happy Money to actually consider you this year. Now, Happy Money is a little sort of geo-restricted, kind of similar to LendingPoint, in the sense that basically loans currently are not offered in Massachusetts or Nevada. They don't have a banking license in those two states. So if you are in those two states, you're not going to find Happy Money interesting. And in terms of length of credit history, they want you to have at least 4 years for you to qualify. There's no minimum income requirement. So even if you're not making money this year, you can still qualify. Okay. But one thing for sure, if you want to really get a Happy Money personal loan, you want to check your credit first. Everything starts with you checking your credit and see how much you can qualify for. So checking your credit, and then you pre-qualify for a loan. So they also have the process whereby you can have a soft pull process where you can see how much you can potentially qualify for. Okay, so go to a Happy Money website and click on pre-qualify for a loan. And this process involves actually a soft credit pull. And again, I want to insist on the fact that this is a soft pull, which will not impact your credit score. And if you pre-qualify for a Happy Money loan, you'll be able to see the rates, terms, and amounts you may receive. And keep in mind that this offer is not guaranteed though. So once you actually go through the pre-qual process and you like what you see, if you like an offer that you see, you just accept an offer, okay? And you'll need to provide any required documents such as bank statements, W-2s, and a government-issued form of ID. And Happy Money will run a hard credit pull at that time, which can cause really your credit score to actually ding. Actually, it might drop a few points, maybe 5 or 10 points. Okay, and so once everything is fine, they will approve your loan, and then they will send you a loan like the loan paperwork for you to sign everything. Okay, and they will so if your loan request is approved, you will sign your loan agreements and make a plan to repay your new personal loan, and it can really take 3 to 6 business days before you receive your loan funds. And Happy Money can also send your money your money directly to your credit card issuers if you want it that way. So that's really a possibility. And if your application is denied, it may be time to boost your chances of loan approval anyway. So what's the selection here? So when you think about LendingPoint versus Achieve versus Happy Money, which one should you go for this year? Well, the thing is that before you choose either one of those three players, you got to really ask yourself, how do you actually choose a personal loan provider? You have to really understand what you need it for, what you need the loan for. Okay, getting a loan is actually a pretty methodical process, but you got to really ask yourself, once I get the loan, what am I using it for, and how am I going to repay the loan? So be very clear. One thing for sure, personal loans can cover a wide range of expenses, but they should still be approached with the same caution that you would take with any other credit products. So only borrow as much as you need, and only as much as you can comfortably afford to pay back. Okay, and and after understanding what you need the money for, you want to review your credit score. So the best personal loan interest rates and repayment terms will be reserved for applicants with the highest credit scores and lowest DTI ratios. So be sure to review your credit score and boost it as high as possible before applying, before, not after or not during, okay, before. And you want to get your documents in order. So whether you go with LendingPoint or Achieve or Happy Money, you got to have your paperwork in order before you start anything, okay? You want to also start shopping for lenders. So just like you wouldn't purchase the first car you test drove or the first home you saw when home buying, you shouldn't necessarily take the first personal loan offer that you see. Instead, you want to shop around to see which lenders are offering the best rates and terms, and which only seem like they are, okay? And and you want to apply for pre-qual. Always go for pre-qual. You never know. Always go for pre-qual and compare offers, okay? Compare and contrast which offers you will be better for you. So LendingPoint versus Achieve versus Happy Money. What's the pick here? Which one should you go for this year? So our choice goes for Achieve. Why? Because with the Happy Money, you are restricted to what you can use the money for. You can only use the money for credit card consolidation, credit card debt consolidation. So you can't really get the cash to use for regular everyday stuff. Okay. And LendingPoint is kind of limiting in the sense that LendingPoint is giving you only $1,000 to $36,000, and they're charging you actually they're charging you what, up to a 7% in terms of origination fee. Whereas Achieve, which is the better option in our view, Achieve is giving you anywhere from $5,000 to $50,000 and only charging you a 2% origination fee. And you're getting the money in your account. Like, they're not really sending the money to a third party lender. No, they're giving you the money right away. So that's really good. So what's the quota here? In today's conversation, I spoke to you about LendingPoint versus Achieve versus Happy Money. I give you the loans, the selection, the pick, and now the quota. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.